Welcome back, everyone, to the Relai Bitcoin podcast. And today we are going to dive deep into the mining topics because I have Kent Halliburton here from Sazmining. Kent, how has your day been so far? And I have to say, I think you have one of the better backgrounds so far in the podcast.
Oh well, I'm glad you think so. Day's going good so far, man. Really happy to be here. Thanks for hosting me, Joel. The background you see here is the high Amazon. So I live where the Andes meet the Amazon in Peru.
Nice. And I'm sure we'll talk about the location in a second. But before we get going into that, if you have to give the pitch, what Sazmining is about, why you are so interested in the mining business, can you give us that takedown? And also, what got you going and interested in getting your foothold in Bitcoin mining as a whole?
Oh boy, there's a lot on that one, but the vision that we've got here at Sazmining is really to reconnect people with time, money, and energy, and able to do that by helping folks acquire and stack their sats the way that Satoshi designed the network, and it is a alternative energy cost averaging process where you're averaging into a Bitcoin position through electricity costs, and it is a cypherpunk way to acquire your Bitcoin because it's directly from the network and not through the secondary market, which has a lot of hallmarks of a banking surveillance system. So that's what we're doing here. How I got into mining, well, that's a bit of a story, and part of it is related to Peru. So I worked in the rooftop solar sector for about a decade, from 2005 to 14, and at the top of my game, I was working for a publicly traded company, and we were installing hundreds of rooftop solar systems across 9 different states in the U.S., and I was in charge of sales, software, and post-acquisition integration. And the board of directors came in and decided that they wanted to hire a new CEO. And after I met him and got to experience where he was going to take the organization, I felt like it was a good opportunity to pursue another lifelong dream I'd had, which was to throw on a backpack and see the planet. So I traveled and had a sabbatical for a couple of years and made my way through Austria as well, though I didn't get to Switzerland. I actually have a phenomenal experience in Innsbruck and the Schettebel and
Nice.
Hiking around there. It's gorgeous. Yeah, absolutely fell in love with it. But during that time though, I bumped into a Portuguese woman who would become my wife, and bumped into Portuguese, which became a passion. So I restarted my life in 2016 in Portugal, living the American dream, but in Portugal. So that meant house, marriage, family, entrepreneurship, all of that. And Jeff Booth's The Price of Tomorrow was a book that, after several failed entrepreneurial activities that I set out on in Portugal, his book really helped me to see that, oh my gosh, what am I doing? The solar energy background in Bitcoin mining, this is where I belong. So I through a mutual acquaintance, met the founder of Sazmining, helped him to raise some capital, and we pivoted the business in 2021. And slightly little known fact, but I was actually, one of the failed business endeavors was I was attempting to do something very similar to Relai in Portugal, a dollar cost averaging product to help people build positions. Maybe that's not what Relay is focused on any longer, but that was the aim, and this was like 2018 time frame. So yeah, it was interesting, and always been supportive of Relay as a result, just seeing what you guys have built and developed, because I just know it's such an important product.
Yeah, definitely. I think our main core of the product is still the DCA, so savings plans and auto invest options. It makes it a bit easier, especially for us in marketing, that we're now with the MiCA licensing, which you have to have in Europe, that we are available obviously for more countries, including Portugal, for any of the listeners, because I know we always got requests like, when is the app available? It will be now. But one interesting aspect I saw on your guys' website was that you can really hammer down hard on you can actually get sats at a discount compared to if you get it on the secondary markets as you speak. And I think other companies in our positions wouldn't talk to you guys, but we are all in on getting to highlight the entire ecosystem. How are you guys at Sazmining doing this? Is it using renewable energy and therefore having a very low cost average basis for energy? Or are you guys also just using the proprietary advantages of the modern hardware we have in mining?
I would say both, or
Okay.
yes. So it's sort of all of the above, and yeah, I think you actually identified something that's actually really important, which is we actually discovered. So this wasn't out the gate. What we discovered though is that Bitcoiners were our best customers, right? So when you come to mining, you sort of have an implicit bias what you consider your money as, and as a Bitcoiner, you come to mining to acquire Bitcoin, but there's actually most of the hashing on the network is coming from folks that are looking to actually acquire more fiat, and Bitcoin is just a stepping stone to get more fiat. And we realized pretty quickly that those customers didn't actually align with us very well, and so we changed our focus to only be on Bitcoin-based acquisition. And so in an odd way, yes, we offer a very different experience, but we are competing for the same client that wants to acquire Bitcoin. Maybe they want a different experience that you can deliver, or they want an experience that I can deliver, but there is kind of a competition there because we want our customers are seeking to acquire Bitcoin. Now, on the renewable energy side, all of our operations run on 100% carbon-free power, and that's hydropower. So there is no carbon emission side of things. And if you look at the network as a whole, it's been a little bit of a red herring, actually a lot of a red herring, that Bitcoin mining is this plague on the planet that's, causing us to burn coal and destroy all the fish in the sea and all this stuff. And it's a bit sad that that's happened, because it's actually quite the opposite. And if you look at the incentives, which I think is always fun to do as a Bitcoiner, because I see that most Bitcoiners tend to understand incentives a little bit more, because when you understand Bitcoin, it's because you see all the actors in the system are operating according to the incentives, and the system thrives, right? Bitcoin as a network thrives because everybody maximizes their own self-interest, which is really the genius of Satoshi, from where I sit, is he harnessed human self-interest, and that's what's bootstrapped the network to this point. But if you look at the incentive set of miners, the biggest expense to mine Bitcoin is your electricity cost, right? So if you're looking for the cheapest electricity, simple logic says, what's the cheapest electricity? And the cheapest electricity is the electricity nobody wants. Well, what's the electricity nobody wants? Well, it's the electricity that's either produced at the wrong place or the wrong time, or maybe both to some degree. Well, what electricity is that? Well, oftentimes that's clean energy, because the place where the dam isn't next to where the city is. So your hydroelectricity is being produced at the wrong location. The sun isn't shining for solar during the night, so there's an incongruence there, but it's producing too much during the day, so wrong time, wrong location issue. Wind, something very similar, right? So when you look at it, unless you're doing a carbon-based fuel source for your production, which is energy in, electricity out, you're going to kind of have this mismatch. And so Bitcoin miners are just naturally gravitating to clean energy solutions, which is the most ironic part of the entire debate. And you can actually see this in the numbers. Last time I looked, the network itself was 57% carbon-free powered, which makes it both the cleanest industry on the planet as well as the cleanest nation state on the planet if you're comparing it to other nation states, which arguably Bitcoin is a network state.
Yes, and I think this is one of the facts. I mean, we're not fighting it as hard as we used to in the days. Mm-hmm. And I like to often cite, the studies where you actually look at the data from 2017, 18 onwards to today. I think a lot of people misunderstand that we added something like close to 30% in renewable energy in that time frame, and that it actually takes time, as you've established, to also get these sites going. Because you mentioned before coming out of Peru now, it's not like you could go there, set up, a few containers, and you plug in and happy days, you mine Bitcoin. There is actually a whole process involved in it. Do you see this as a stepping stone, as why we're maybe not at 70, maybe 80% CO2 free energy sources or renewable energies? Or does this just take time also for established miners, but obviously new projects, to have that aha moment and go, oh, we should actually also utilize this chance for ourselves?
Well, I think it's all going to be driven by the incentives of what's the cheapest electricity cost, right? And those incentive sets are in motion. So what I've seen is that phase one of Bitcoin mining is to be the buyer of last resort. And what I mean by that is a lot of times the renewable energy projects are there, or the natural gas oil well that isn't connected to the gas grid is there, and it's not being utilized, or it's being underutilized. And in those operations, Bitcoin mining can come in and say, cool, like you can't export this energy, or you're doing it at a loss. So point being that what we're seeing is that Bitcoin mining is being strapped onto power generation assets after the fact. What I believe the next phase is going to be is where Bitcoin mining is incorporated to new power generation projects from the beginning. And I don't know how that is going to play out, but what I'm seeing already, we're in conversations with companies that do solar, for instance. And I can see those advancing to the point where it makes sense to include mining to begin with. And when you do that, you're going to wind up with a different outcome. So I'm curious to see how that second generation Bitcoin mining project actually develops, because I think that's actually what's really going to change the dynamic for how carbon free the network is.
Yeah, I think interesting things we see, for example, over here in Europe is I recently interviewed two companies in the mining space. One was more retail oriented, so they're actually using the excess heat to heat homes. So you have sort of the waste product in quotation marks from mining, but you then utilize it more. Same can be done for a greenhouse. Other company that was on the interview actually does dry fruit, so that dry mangoes and these kind of things. And they have a byproduct, but I think the real kicker would be if also grids get on board. And like you explained, hey, solar is super effective from, let's say, 10 a.m. to 3 p.m. And we actually have an overload, can you guys take care of it? And this slowly graduates into the whole industry.
Yeah, and to be fair, we've got 4 data centers, right? And one of them is in the Arctic Circle in Norway, and it's a heat reuse project as well, right? So it's heating a building that I think about a century-old hospital that's been converted into a business center, but is being heated completely off of the Bitcoin mining operation, and that allowed them to remove an oil boiler, right? So there's a lot that can be done on the clean energy side. And I think actually the fascinating part about the heat reuse is because you get another, you probably know this, Joel, but for your audience, because you're able to sell the heat, it in essence lowers your operational expense and it makes you more competitive as a Bitcoin miner. So there's an argument to be said that as the network gets continually more competitive, that you may have to figure out a way to sell heat in order to be competitive on the network.
Yeah, and we also see, I don't know how you look at this. Now, I'm looking at this as a layman from the outside, not involved extensively in the Bitcoin world. You do see more announcements of the major publicly traded miners going into AI. We also seen the announcement after time of recording today with Iron. We saw it with Cypher. So there is also, I wouldn't say a pivot away from Bitcoin, but just a realization hey, we're also quite good in that front. Is this also something you guys are looking at? Because I guess the operational standpoint of where you're coming from is different than a publicly traded miner in Texas, for example. Is there interest also in business opportunities for you guys to cap into these markets? Or is it more, nope, we want to focus on Bitcoin, we want to make this process as efficient as possible?
Yeah, the latter. But I actually think it would be good to just explain our business model a little bit, because we actually have less of that opportunity than the pubcos do because of how we're structured. So what we do is we allow access. So we built a software as a service solution, and then we strapped our first data center onto that in January of 2023 in Wisconsin. that was our proof of concept. Could we actually build and deliver on this? And indeed we have. We've got, we're pushing 450 clients at this point, and we've got data centers across 4 different continents, close to 20 megawatts in capacity all in. So as a business, okay, the model works, but the model works by us going out and sourcing these data centers. So in the same way that Uber or Airbnb, your classic software as a service models that grew so big during the Web 2 phase of the internet's evolution, in the same way, we don't own the energy production assets and the data centers. We're out there looking for the best opportunities for our clients and then matching them together. And so what we see though is, from an AI perspective, AI is coming along and gobbling up a lot of low-cost electricity that's out there. And the Bitcoin miners, the publicly traded Bitcoin miners, they have contracts for this low-cost energy. So for them to be able to contract that low electricity price and sell it at this high price, when you have a fiscal responsibility to your investors to return a dollar-based ROI or return to your investors, it's almost by definition that they're sort of having to pivot towards that from my vantage point. And it's part of why our latest data center operation is in Ethiopia, because Bitcoin mining is very good at going to places that are more edgy jurisdictions. Like if you look in the US, the electricity price is going up dramatically. I can't speak to Europe so much, but this competition
exactly the same.
Yeah, I would imagine exactly the same, right? I mean, I lived in Portugal through 2021, right? 2016 to 21. So electricity, very expensive there. But you see AI is putting pressure, and especially in these jurisdictions that are kind of classic. The beauty of Bitcoin mining is you don't have to be there, right? The type of data center that you need as a Bitcoin miner is not the same thing as you need for high power compute, And so as a result, we can be, as Brandon Quittem, who's an advisor of Sazmining, pinned the article, like Bitcoin is the pioneer species, like we really can kind of come in there into a situation like Ethiopia or Paraguay, where the majority of our operations currently are, and set up shop with a data center operator that has helped kind of break ground, figure it all out locally, and help turn an economic drag, for instance, like in Paraguay, into an economic opportunity for the country. And that's probably too edgy for the classic high power compute AI companies to come into. So what I see is, although electricity prices going up in the US and the publicly traded miners are kind of pivoting to take advantage of that opportunity, the globe is still a massive open arms race for Bitcoin mining, if you're willing to just not look specifically in these jurisdictions that AI is.
Yeah, I mean, what it goes back to what you were saying earlier in the pod, when you said you really arbitrage the way Satoshi envisioned how to actually get Bitcoin, because you actually help out in also decentralizing this whole industry, whether it be with going to places where energy is cheap and you are upbuilding the infrastructure, or whether it would be, like you said, you have more freedom of movement and utilizing the chance to not be reliant on a fiat term. Is this also one of the key visions of Sazmining, where you guys go like, hey, there's mining to be done the publicly traded way, I'm going to call it now the fiat way. I hope no one who's watching from the publicly traded miners is offended by this. And there is the way we are doing it, where we are actually putting Bitcoin as a denominator first as well, and giving people opportunity through this.
Well, yeah, and I actually, by definition, if you're a publicly traded company, unless you changed your investor mandate, which I'm not aware any of the publicly traded companies have, you have an obligation to create a return for your investors. That return is denominated in dollars. So by definition, if you're a publicly traded company, your Bitcoin is a stepping stone to get more dollars. And I like to call that a fiat hasher, because at the end of the day, most of the Bitcoin network right now, and this is kind of a sad reality, but I think it's one that the Bitcoin community is starting to wake up to, the majority of the hash rate on the network is by people that are there to eventually acquire fiat. They're not there to acquire Bitcoin in the way that the Bitcoin community would. And there's actually some really important history that I've uncovered in my journey here that very few Bitcoiners today understand. But if you go talk to an OG from the 2010 to 2013 era, you'll find that almost all of them acquired their Bitcoin through mining it. There wasn't the exchange-based acquisition model for acquiring your Bitcoin. And in 2013, that changed. The timeline sort of split because two things happened that I've been able to identify. One, that's when the ASIC came online, so you needed specialty hardware to be competitive. And two, that's also when Coinbase opened its doors. So both of those occurrences happening at the same time drove people away from acquiring their Bitcoin by mining it. And to me, that's actually why we have problems with mining centralization now. Because if the majority of the Bitcoiners on the network were there to acquire Bitcoin through mining it instead of Bitcoin through buying it, I don't believe we would have the downstream mining centralization issues, because we'd be the vanguards protecting the network. So I actually think that as Bitcoiners, like, look, forget about Sazmining. Like, yeah, okay, you're welcome to come work with us, but at the end of the day, I think as Bitcoiners, we have an obligation to participate with the network and to help protect it, because there's no stronger social layer than a Bitcoiner, somebody that's there to mine to acquire Bitcoin. We're the best protectors of the network.
And because you spoke before, like, we realized our key targets are Bitcoiners. Are the majority of people who are actively looking for capital allocation with Sazmining or who are interested in a product also more coming from that Bitcoin perspective? Or have you also noticed people contacting you and going, ooh, I like what you're doing, I get the energy standpoint maybe, and through this they eventually become Bitcoiners?
No, much more the first. It's really interesting, actually. So when we came out of the gate, like, there's two, like, advantages, or three, advantages that you get when you mine Bitcoin versus buy it. One is, and probably one of our bigger demand drivers, is the wild sats side of things. So the fact that these sats right off the network is a great advantage that a lot of people value. Two is the energy cost of the Bitcoin, right? So setting the hardware aside, like right now, just for an example, in Ethiopia, your energy cost, meaning how much you spend for electricity versus how much Bitcoin you get, prices Bitcoin at about $50,000. So that winds up being quite a discount to purchasing it. So your energy cost averaging into a Bitcoin position at quite a discount as compared to buying it. But the third, and I think it's actually the reason why the DCA products have been so prominent in the Bitcoin community, is point of purchase volatility. We're also able to get around that, right? Because when you have, like, there's a few different stages that I think of adoption of Bitcoin. There's your no coiner, there's your pre-coiner, there's your early Bitcoiner, and then there's your Bitcoiner, right? And so for the pre-coiner that's, like, been studying it, looking at it, gonna go make it their first purchase, what they don't want to feel is stupid after buying, right? And so if you go to an exchange, you wire a couple grand, I'm going to go get my first, big allocations of Bitcoin. You hit that big red buy button, and then Bitcoin drops, $20,000, $30,000 like it has recently. You feel like an idiot and you want to walk away, and we've actually blackpilled you on Bitcoin inadvertently. And that's where I think the DCA products are wonderful. And it's also why I think mining is so valuable, is because you're able to buy this hard asset, so you don't have to worry about the volatility of Bitcoin's price action. There is a little bit with mining rigs, but in general, they've been very, very steady this cycle. But you buy a piece of hardware and it generates Bitcoin. And the fascinating thing from our testing with our product before we launched, so this is 2022, was that when we tested women and men, we actually found that more women liked our product than men. And it took me a little while to realize why, but I think it's because of that difference in risk profile. There's a lot more men that will go be stock traders, and there's a lot more women that will necessarily get into real estate for cash flow generating assets. I just think men and women just have different, and this is broad brush strokes that I'm saying it, but we are different, right? And different risk tolerances, different risk profiles. So I actually think that mining potentially opens the door to a different set of the community that we've not been able to welcome in very well until now.
Yeah, and I mean, the process is pretty straightforward if you also go on your websites. I like the claim where you basically say, you bring the rigs and we do the rest. Is that pretty much the process if, like, someone comes to you, I'm going to name out now any country in Europe, let's go with Croatia, I've been there last summer, beautiful country. They can go, hey, we got super cheap access to wind energy or to solar or even hydro, and we would really like to establish this. We already invested upfront in the rigs. how can you guys help us out? Is this like the regular approach of how people come towards you, or is it much earlier where they go, I've always been fascinated, I always want to participate, secure the network, and obviously get the freshly minted Bitcoin off that? Or is there an in-between the two?
Well, I would say it's more the latter than the former, right? So what we do is we go contract the data centers, right? So we're searching the globe for the low-cost power with a data center operator that we can trust, and then do a deep dive on that. Typically takes 3 to 6 months to bring that type of an opportunity to market. But once we've contracted it, then on the front end, we've got an e-commerce platform. So you go on there and choose a variety of different mining rigs, purchase it, sell it to you at cost. So we don't make money selling either. Well, maybe just back up and explain the business model generally. There's 3 ways you make money in our type of a business. You either make money selling hardware, so put a profit margin in your hardware sales, put a profit margin in your electricity sales, or because the hardware will generate Bitcoin, if you tie yourself to the Bitcoin rewards in our type of business, that means that if I'm not making you Bitcoin, Joel, I'm not getting paid either. And so that's how we set up the business. So we pass through the costs. We don't make money selling hardware or electricity. But once you're plugged in and mining, for managing it and creating that opportunity, we do have the mining pool split out 15% of the rewards, and they get sent to our wallet. And that's our management fee. So all in, your Bitcoin, we're non-custodial. We never touch your Bitcoin. It's sent directly from the mining pool. And you're paying covering the cost for the opportunity, but for managing it and making it nice and simple, we do take 15% as our management fee.
Which is still, if you compare it to regular, comparing it now to finance, the regular thing with hedge funds and these kind of setups would be a 2 and 20. So even comparing that to what you guys offer, you are still in favor of actually getting people more Bitcoin, which is something I really love about the way you guys operate. And I also like the aspect that you are looking for these data centers. So if I understand you correctly, a majority of your time is also spent in that due diligence part. What is the local law enforcement situation? Like, do you have to get specific license and all of these things? Has this been in the past a stepping stone for you where you go like, oof, we have certain jurisdictions where we know we get in easier, it would be faster to establish a shop and then get up running? Or is this also ever evolving the more we see these kind of businesses getting going in Bitcoin as a whole?
Well, yeah, the data center is the other side of the platform, right? So that on one side is the customer coming in, and we're playing matchmaker with the data center. And so what we've seen there is, yes, we've looked in specific jurisdictions, but what we've actually found is most of the time operators are coming to us because we offer a very unique value proposition to them, which is most of the time, if you go out there and you secure power for yourself and you secure infrastructure, the most expensive part is not those things. The most expensive part is actually the mining rigs and getting them on the shelf. And we can come in, and let's say, Joel, you've gone out to Tanzania and you've gotten a 10 megawatt opportunity, but at the end, you've only got enough capability to fill 5 megawatts. Well, what do you do with the other 5 megawatts? You at least want to sell the power and make a bit of money. So we can come in, and assuming that everything vets, we can come in and contract that extra 5 megawatts and fill it. And then it's not so expensive. The data center operator is already operating their fleet. They're right there. They just extend to our fleet, and we work to align incentives to the contract negotiation. But we can, in essence, help them get more out of what they were already going to spend.
Interesting. And in terms of now a broader look at the world, where do you see, in terms of, let's break it down into continents, the continent with the biggest potential, where you would say, hey, we actually need more of the mining sites, the data centers there, and to really kickstart the Bitcoin mining revolution as you guys do it?
Yeah, so I think there's some really key geographies, and those mainly have to do with hydro. And so we will be short term, likely, not short, medium term there, because there will come a point in time where the grid is more stable and the country is more stable, and somebody else will want to pay more for the same electricity than we will be willing to, and then we'll have to move on. But right now, Paraguay, Ethiopia, and Bhutan are the top three that come to mind, and we're in two of those three jurisdictions right now. I'd ideally like to be in the third by the end of next year, but I think having a seat at these places that have excess hydroelectricity that they don't have a way to monetize through any other means other than Bitcoin mining is just a good longer term strategy, because you wind up, for us, why I wanted to be not just a US based company was there's jurisdictional risk everywhere with mining. Until we get adopted fully into the system, to me the wisest approach was not to tie ourselves to any one jurisdiction, because if something changes, if something shifts, we've got all of our eggs in one basket. So having ourselves spread across 4 different continents right now actually serves as better protection as we grow and scale. And of course, every one of the countries, continents, and specific data center opportunities is thoroughly vetted for risks. You look at Paraguay, they're repatriating electricity that they're selling at a loss, right? So there's a key incentive there that drives the macro conditions. In Ethiopia, they have a desperate need for dollars that they're not able to secure in any other meaningful way other than mining, and that's all to pay an IMF loan, right? So these key incentives are what I see as protecting the mining opportunity there, because in both locations, the politicians there aren't going to want to, kill the golden goose. They need what Bitcoin mining provides.
Yeah, and I think one thing that really drives me up the wall if I speak to friends who they just don't get into Bitcoin because they see the environmental risk, and I'm putting it in quotation marks for audio listeners, because they often argue with, you go to these, they call it third world countries, they're already struggling, they are levered up to the teeth in loans to the IMF and such, and now you're also going there and stealing their energy. If you hear this argument, because I got my sakes, but maybe I get something from you, what is your counter argument to hearing these things? Because if they actually take the half an hour time to talking to you, they would realize, hang on a minute, it's not them taking something away from them, it's actually giving something back and giving them an opportunity to start out. But I'll leave the answering of the question to you.
Well, yeah, I find it's unfortunately, it comes from a place of people being programmed without working from first principles. And I actually, I will make those arguments exactly as you've said, because we are creating jobs in a local way. We are consuming electricity that otherwise wouldn't be able to be put to use. So it's an economic uplift. And that infrastructure fundamentally that's being built will go on to serve other industries. So all those things are true, but I find what often misses is the comparison to how people are acquiring their money today, right? Which is more impactful to me personally, and so I always try to share that. It's okay, cool, well, you have this thing about Bitcoin that the mining and energy use is bad, but what's the comparable right now? And in the EU, it's the euro, right? So how much is the energy equivalent consumption of the euro? And I like to go into that conversation with folks, and I can do that in dollars a bit better than I can in euros, but I find that makes people very uncomfortable when I bring that up. But it's if you're going to be truthful and honest about it, you need to actually do the compared to what question with people that bring up the energy usage argument for Bitcoin mining.
So if I understood you correctly, also you guys are big on hydro, and you said it's more of a mid-vision plan. If you put that into years, do you see there a utilization of hydro in a different manner in the future, or an alternative energy resource that comes about? Because one of the key issues with alternative energy is the reliability, and obviously, how can you transport that energy? So is there a trend amongst the mining industry where guys go, okay, the next 10 years we're in for that then most likely it's going to be this? Or is it really an ever-evolving industry where you just have to go with what's available at the current moment?
Well, I think you place some strategic bets on where you think things are going, and I think it's always evolving. It seems like as a civilization right now, the core need for more electricity generation is becoming very apparent across the globe. We're moving, whether it's from a carbon-free desire, or whether it's from a AI desire, or whether it's from a we want better money desire. There's just this push right now to transform us into looking at kilowatt hour consumption as the major metric instead of oil. And I actually think that sats per kilowatt hour will become a very meaningful metric and replace the cost of a barrel of oil over time, because
nice.
We're electrifying things. So where do I see things going? I am convinced still that solar is going to be a big piece of this for a couple of reasons. So solar is the only way we know how to make electricity without moving anything, which is more in what you see out my window here, right? It's more biomimicry. It's how plants convert the energy of the sun into growth. And I think that over time, because of the low cost of that power generation, will wind up becoming a major asset. So I'm not as big a fan of like industrial scale solar where you see it, covering usable land. But if we already have a surface there, coating it in solar just makes sense to generate electricity. And I think the missing link for really unlocking that electricity in a more meaningful way has been batteries, and batteries are coming close to low enough costs that once that occurs, you can now be in a position to attach mining to these particular smaller facilities. And when that occurs, now there's no excess in the system, because that's always the problem with even a solar battery grid system, is you still have some excess. Well, if mining can sop up that excess and turn it into a useful asset, Bitcoin, well, now suddenly you've got this three-legged stool that can really scale in a pretty impactful way. And if you see right now in China, they're installing more solar than any other energy source. And that's, I think, for a very strategic reason, because you make electricity without moving anything, so you've got very low cost in maintenance, and it lasts for 25 to 35 years. At least that's the current projection. So, this is long-term durable energy generation. And I think when you partner that with Bitcoin mining and batteries, like, we're going to see a very, very interesting unlock for our species.
Yeah, definitely. Wasn't it the second largest, or even the largest energy provider also in Japan last fall, like a little bit over a year ago, who actually realized this, and they went like, oh, we got so much excess solar energy, we just cannot use it in the grid, or we cannot distribute it. So they started looking at establishing a mining site and have been testing around with it. So there is definitely interest. And is this also something you guys have already noticed early enough with Sazmining, where you have been approached by solar first, I'm going to call them now, data centers, who said, hey, we have heard of this and this is an interesting aspect to us? Or do you think it will just take time until the battery problem is fully solved? Well, it is solved, but like until the cost benefit is low enough that people will actually also start utilizing it on a, let's say, larger scale?
Yeah, I've seen a few solar mining projects, grid-tied solar mining projects come to fruition, but I think, at the end of the day, when it comes to mega scale sites, what you see is it really just comes down to the economics and dealing with the risks involved with actual construction. And the fact that we've not seen more of those suggests to me that there's either a problem with the economics, or there is a problem with the economics still that I believe batteries will largely unlock.
Nice. And speaking about Sazmining, before we get into the last part of the interview, what is on the horizon for you guys next in 2026 and beyond?
Oh man, I love that question. So one of the things that we are working to do, you know, as an early stage startup, you come out of the gate and you just have a minimum product, and then you see what your customers want and you iterate. So we just launched Ocean a couple months ago. So we were the first to integrate and have a revenue share approach to Ocean. In fact, we've locked our first couple of blocks with Ocean, one about 6 weeks ago and one over the weekend, so pretty proud of that. But we're looking at financing options, so we're looking for ways for our clients to be able to unlock their Bitcoin to mine more Bitcoin by posting Bitcoin as collateral. So that's something exciting that's on the horizon. We have more features that we want to deliver in terms of the dashboard itself. So we've integrated several different aspects of the mining experience to create a simplified approach to understanding the Bitcoin mining operation. So the idea is to make mining accessible even to, you know, your mother, so that she doesn't have to worry or wonder what's going on with it. And so, you know, you sign up, you purchase with a credit card your mining rig. That's how a lot of customers choose to. And then you leave a credit card on file and you're only charged for the electricity your rig consumes. Your Bitcoin goes to the address that you've provided. So it's very hands-off, just a stream of sats. But there's lots of incremental things to improve that experience that we're working on. But I'd say financing is probably the biggest. And then if we're lucky, by the end of next year, we'll have more of a marketplace developed as well for people to buy and sell mining rigs.
Interesting. And I'm guessing if OGs come or if people with Bitcoin come and they want to buy a mining rig with Bitcoin, that is obviously also available.
Oh, of course. Yeah. In fact, we offer discounts to anybody that purchases with Bitcoin. The issue is that if you look at the value proposition of using your Bitcoin to try to get more Bitcoin, unless you're posting it as collateral to get a loan, which is pretty interesting actually, but unless you're posting it as collateral and taking out a percentage of that to buy hardware, it's hard to justify unless you nail the right timing. And that's becoming increasingly more questionable. That said, we have a lot of people that buy with Bitcoin because we offer 5% discount, and so they find that it's cheaper to just transfer dollars to an exchange, get Bitcoin, and then buy their hardware with it to get the discount than it is to pay with their credit card. So we get a lot of that type of business too.
Interesting, super cool. Kent, if people want to find out more about you and about Sazmining, where is the best place to? And please feel free, as the last resort of the podcast always, to also shill or mention anything you want people to find out more about.
Yeah, no, the right to shill is a fun one. Thank you, Joel. The best place to find me is on Twitter. @KHalliburton is my handle. I always keep my DMs open. Sazmining.com is the website. Would love to hear from you feedback-wise, and any questions you ask. Would be happy to answer those. But I think, you know, fundamentally, we are a Bitcoin company. Bitcoiners is all we employ, and we built this product specifically for Bitcoiners to acquire their sats like Satoshi. And all those ancillary benefits, I think you will find. And I know these are probably fighting words, Joel. I don't intend them, but I do think that we've got the best Bitcoin acquisition experience, because once you've gone this route of mining your own Bitcoin, it's just so simple. You just purchased a piece of hardware or mining rig, and you don't do anything else except for provide your Bitcoin address. So it's very stress-free Bitcoin acquisition.
Yeah, and I think this is the great thing about the Bitcoin industry as a whole. Like, the pie is so big enough, and we all want people to get into Bitcoin. So at least from my experience, there is no infighting between like companies or ways of getting to Bitcoin. The number one goal for everyone is that people actually get their sats in their wallets. And, you know, with you guys, if they are interested in the energy sector, in the mining sector, they also have an address. And that should be the main target of the day, right? And not the constant X-fighting and the, like, who does it better? Who cares at the end of the day?
Yeah, no, I'm a big believer in a rising tide lifts all boats, and my comments are just in jest because I agree with you. You know, the funny thing about living in Latin America is that, at least from a U.S. perspective, I never thought that if you put all the hardware stores on the same block, that would be good for business, or if you put all the nurseries on the same block, or all the electrical, the cell phone stores. But what you find is that's what they do here, and it works because now you know this is just a block you go to when you want to go get your cell phone. or you need to get an electrical outlet, you know. And I think the same thing about Bitcoin adoption. It's just good to get the Bitcoin companies in the same spot talking about Bitcoin, because then people know where to go, because it's still considered so niche. So yeah, I very much look at us as allies in arms, despite the jesting comments here or there. You know, it's different strokes for different folks, how people want to acquire their Bitcoin, and I'm grateful that there's great companies like Relai out there that help people.
Yeah, same back to you guys. So if anyone listening or watching is interested, I put the links to everything Ken mentioned in the show notes. And Ken, thanks very much for your time. And I hope to see you then soon at maybe one of the conferences. Who knows? I've not been to Latin America yet in the last couple of years. I've been a few times, but it would definitely be worth a catch up and to maybe also see one of the sites in person.
Yeah, well, I'll be at Adopting Bitcoin next week. So if any of your viewers will see this before Adopting Bitcoin, please look me up.
Nice. We'll also put that in the show notes. Ken, thanks very much for your time and obviously the time of our listeners. And we'll see you in the next one.
Thanks, Joel.
Hey, this is Joel again from the Relai team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.